Danny, welcome
Hello,
back to
can you hear me?
F.A.C.E.
I'm
I
here. Can you
can't.
hear me?
I can hear you loud and clear. Can you hear me, buddy?
Yes, my friend.
All right.
Cool.
So it's welcome back.
Thank you for having me. I had fun the other day.
Yeah.
So chat to you guys.
Yeah. So I thought I might clarify some of the things that I said. We had an exchange on Twitter.
Right.
And just show you a couple of things that and you can't blame this on the Fed. I mean, it's
Right.
weather, it's all kinds of
Right.
getting a correction, but I mean, you look at the price of beans have doubled, the price of corn has 250%, wheat, and you know what happened to copper. So anyway, I remember, I think it was in the 80s. It was, Volcker, when Volcker took rates up to 18%, we had a bull market in grains there because of a drought. And it, even though rates were going up, it didn't break the corn until they really got extreme. It had much bigger impact on industrial type commodities like copper and oil and lumber, because with 18% mortgage rates, it's the opposite of demand for lumber today. So I just wanted to show you that some of these things are out of the Fed's control,
Right.
but I really wanted to talk to you about what you thought about Janet Yellen's statement about 3 weeks ago, and then her retraction of that higher rates may be coming, and the market sold off, and then she had to retract it. What was that about?
Well, can I tell you a story?
Yeah, sure.
Let me tell you a story. So I know these people. I was in Janet Yellen's office once, right?
Right.
And she said to me, if you remember this is the very first press conference. She said to me, the biggest mistake I ever made at that first press conference was answering a question.
Yeah. Yeah, okay.
Which of course she said, I never made that mistake ever again. I mean, I think obviously the story you and I have talked about is what is going on in this crazy recovery. And obviously the questions are, there are supply bottlenecks. And the sensible thing for the central bank to do is to sit and watch and wait. That's the right thing to do. And I think obviously market traders want to worry about, what the heck is going on here. But I think I would take people back to 2008. And I was talking with my students this week about the meetings at the Bank of England in July and August 2008, where the inflation rate went to about 5%. Oil prices were heading upward, and people were making trades at, $150 a barrel. And on my committee, there was a vote for a rate rise as well as a rate cut. Well, look at what happened afterwards. So, of course, everything plummeted. And I think that's the first thing. I mean, obviously, the question about wheat and soybeans and all of that stuff is what's the source of the rise? But I would say, and I would say to my students, there are two things. The first is in the inflation terms, there are base effects. The second thing is that if you don't like the fact that the price of lumber at DIY has risen, well, don't buy it, go buy something else. So that's how inflation gets moved. But you talked a bit about the UK. So the UK this week was basically the rise in inflation from 0.7 to 1.5 was entirely driven by base effects, almost entirely. And there's going to be a big volatile ride. Inflation is going to go up and down by 0.6. But in the end, you look through it. The central bank, Janet is right, the central bank looks through it and says, these are once-off changes. Most of the stuff, I mean, I understand that food and energy is a little different, but everything else, if the bottle of red wine rises, that doesn't mean inflation rises. It's just you go buy white wine. If the price of lumber is higher, well, put it off, do something else. So I think there's that. And I just don't.
It's added about $34,000 to any house that's built.
Yeah.
So you're saying rent instead of buy.
Yeah, no. I mean, there's all these stories, but the crucial question for Janet, and she's completely right. I mean, most of the time, I think Janet's completely right. The question is for a central bank, what does any of this do to its target, which is inflation in 2 years' time? And I see most of this as being transitory. I don't see, and when you talk back to Volcker, what was so crucial there was that these inflationary increases in commodities and other things and oil were able to be translated into wage growth. And I don't see any of that. So I'm still, I mean, you call me the dove. I'm not sure that's right, but well, remember at the Bank of England, I used to think there were 3 kinds of people: hawks, doves, and pigeons.
Oh, yeah, lots of pigeons. You got to go for the
pigeons. Yeah. And actually, there was one person on my committee, people said that person was a really good person to listen to, because that would always tell you the middle. So knowing the middle sometimes helps.
Listen to the pigeons so you could go the other way.
Yeah, exactly. So the trade is on the pigeons. But I think, but I do think, I mean, what we have to get to is what's the source of these things. I have a friend of mine in lumber who said to me the big rise in demand for lumber was actually during the lockdown, was that every restaurant was building themselves a deck, and people were sitting at home when they were doing DIY things. But presumably that the question is, does that continue itself? And I don't know the story of soybeans. Maybe you're better than I am, but I just think people don't understand on the inflation front. It's almost entirely predictable because we know each month what's being dropped. And we know what's coming. I mean, in the UK, in 3 months' time, we're going to see a -0.4 dropping and probably a +0.4 coming, just because of anno domini. So in 1 month, inflation is probably going to jump by 0.8, but that's going to drop out in 12 months' time. So I'm kind of sit, watch, wait, and follow Janet, who now is of the same view, as is Jay Powell.
Okay, and how about
pretty much as is the Bank of England too.
Okay, is the Bank of England happy about a rising pound here?
Can I tell you another story? I mean, obviously that's an issue. I mean, $1.42 is an issue. I'm probably one of did the dumbest thing. I lived in the US, went to the Bank of England, paid in pounds, and I spent 3 years trying to talk the pound down. And so by the time I left, I went there and it was $2 to the pound. And by the time I left, it was $1.50. So I talked myself into a 25% pay cut. I think they would be obviously concerned about the level of the pound. The pound is very high. Part of the problem with the Bank of England is it's unclear what's going on. 3 people are about to leave. So a third of the committee is going to leave in the next couple of months. Will be reappointed, but it's pretty late to 2 of them to be reappointed. So I think, again, the MPC is going to sit and watch and wait, and we'll see. But I'm sure they're not that happy about the strength of the pound.
Yeah, I think Janet has expressed, like every other former Treasury Secretary, they all want a strong dollar, even though at times, like right now, Danny.
Why?
I mean,
why? I mean,
I don't know. You know her. I would call her up and ask her why she wants a strong. She said it. Okay, that she wants a strong dollar. I don't know why.
Why? I mean, I understand the thing saying America.
So they could keep selling debt. And not have to.
Yeah, but I mean, the economy. I mean, in 2008, once we went through the crisis, the falling value of the pound helped the UK economy because it helps exports.
Right.
So unclear to me why a policymaker would actually think having a strong dollar was good. I don't know.
Okay. Well, they don't have to worry about it right now, do they?
No.
Because I mean, you look at what's happening in the dollar.
Right.
And we're on the verge of, this is a massive top here. A lot of people are thinking we're going to hold, and it does look like a range, but there are a lot of dollar bears out there.
Yeah.
So,
yeah.
So,
I mean, the pickup in a sense in the UK is obviously an issue. I mean, we're seeing crazy things. I mean, the retail sales numbers out this morning up 9% or something, and the PMI is in the 60s. Looking strong. I mean, the issue is obviously there is going to be
compared to the lockdown, they're strong.
They're coming out of the lockdown, but I just think, Dale, we've talked about this before, and the reason why for policymakers you have to sit, wait, and watch. And I think the same thing in the arguments about in many of these states about you say, oh well, we've got to remove the unemployment benefits. I mean, the question is, in the realigning that we're seeing, how many of the firms that were furloughed are going to disappear? What long run changes in behavior are going to happen as this lockdown, loosens?
Well, I was going to go to Coco's last night, and they closed it down the street. I get the senior citizen special, but
well, Hanover, New Hampshire, the main street where Dartmouth is, and we're probably going to go back to real teaching in the fall. But half the places in the town have closed. I mean, I mean, I was seeing some numbers again yesterday from Torsten Slok, a friend of mine, who sends things around, and he showed this thing about footfall in Times Square, which is still about a third what it was 18 months ago.
So even with all of this, Danny, going on, all this support, and all the loans to businesses that are forgivable, that we still have a problem with businesses and jobs coming back. That we're in a solvency problem now. It's not a liquidity problem.
Right.
Is that what you see? Okay.
Absolutely.
And lower rates don't, central bank action cannot save a business from going bankrupt.
Absolutely. And of course, I think in a way the line that Janet and Jay Powell have to take is that this adjustment is going to take a while, and you have to ease the path of adjustment. Firms are going to close. Firms can close much more quickly. The new ones can re-emerge, and there's going to be a change in consumption patterns. So I think that's the big thing that's coming. I mean, okay, Hanover's pretty empty now. Many of the pubs have closed, and the gelato stores. I mean, the question is, presumably those spaces will refill, but they haven't refilled yet, and there's no sign that the pub that's closed is going to reopen. Presumably, it will down the road, and rapid growth will come. But the question is, are you and I going to change our behavior because of a result of what's happened? And I think so. The right strategy is the wait and watch.
I mean, I know that everyone feels like they've been confined for a year.
Right.
And there's going to be this rush to, take vacations and go to restaurants. And I think that once people go out there, they're going to realize it isn't 2019. Even though we have a vaccine, you'll still see servers with masks. And you know what? Prices are going to be up. You go to any restaurant, you even go and get a haircut. Everyone's charging more to make up for lost time during the pandemic. And I think there'll be exhaustion by August.
I completely agree with that.
Do you?
And there's going to be, go back to my earlier point about, someone was, I gave a presentation yesterday, and they were asking me about the prices to do DIY. So I said, well, why are you doing it? If the prices have gone up, don't do it. Do something else. And when the prices have gone back down again, go back and do it again. If prices rise, exactly what you said, people then respond to it, right? The prices have risen. What was attractive at the price of X is no longer attractive at price 2X. That's the long run change in behavior we're going to see. And the economy has to readjust. So a policymaker like a central banker should sit there and say, we have to ease the path of transition. And yes, there are going to be bottlenecks. But in the end, what we're going to see, I suspect, is bigger changes in behavior. The story, in a sense, which in the United States has always been a puzzle, which is a recession comes and you'd think that people would precautionary save, and they don't. But after a splurge, you may well be right? After this big splurge, suddenly people go, hang on, hang on, maybe I should should prepare for something like this coming again. That's the issue. Are people going to use this lockdown pandemic as a way to change their behavior? I don't know the answer to it. Nobody does, but I suspect what you just said is right. People probably are.
Yeah, I think people have, I've never been locked down because, I'm not a criminal. I've never been locked down for a year. It's affected me, whether I admit it or not. I think a lot of people have PTSD over this, and there's no way that behavior doesn't change over a shock like this.
Dale, I'm interested in what people think, what the cause of do you think the cause of I understand those things. What's the cause of the rise in these commodity prices? Is this what is?
Well, you could get any price to rise with a weaker dollar, right, Dan?
Exactly.
You get nominal gains, but in the grains, for example, it's yield problems, weather problems, not as much bottleneck. Copper, commodity demand, mainly from China. They were behind a lot of this copper move. And then, the lumber
moving up, right? Exactly.
Yeah. What's your take on China? It's so opaque to me. I have no idea really what's going on, because there are a lot of people that are saying that China continues to weaken. And I remember in 2008, maybe you do, that they weren't as affected by the Great Recession as the rest of the Western world was. And so they were the engine of growth for the whole world. And they kind of dragged us back up out of that Great Recession.
The story I'd always heard, which I never know whether it was true or not, was some have argued, you may have heard this, that actually the Beijing Games was actually one of the precursors of a slowing of the global economy, because Beijing being so polluted that the Chinese pulled back on production to make sure that the air was clear. And if you just, I mean, the timing's right? The timing of global slowing. And the other thing, in fact, if you go back to the Baltic Dry, look at the collapse of global trade. That came around that time. So it all's a little bit sort of non-transparent. But if you look back at the, the Baltic Dry, which is the measure of global trade, starts to fall dramatically around June. So I think China's probably pretty crucial here, but it's hard quite to understand. As you say, it's opaqueness, but I think it is crucial. It's just trying to understand what's going on. But I think there's something to that. Your listeners may have other views, but the timing kind of looks right.
Yeah, and also, there are big changes that are going to come. Germany's a very important part of the European Union, and Merkel has been there forever.
Right.
And there's a lot of nationalists, kind of right-wing things happening all over the world, here, Europe, everywhere. What do you think happens to, say, the euro during the transition when Merkel leaves?
Well, I mean, the good thing in a way for the Germans, I mean, you and I spend our lives worrying about uncertainty and surprises, right?
Yeah.
So I assume that given what's going on, that they will try very hard not to have surprises. I mean, they've done pretty darn badly in terms of the vaccine, and in a sense, that has actually made Johnson in the UK, his popularity ratings have really held up, not least because of the relative performance of vaccine in the UK compared to in Europe. So I think that's a big deal. Just go back to another thing. I mean, the big thing in Germany, actually, I spend quite a lot of time with my students looking at population, and Germany has this giant
demographics.
The demographics in Germany, especially Germany, Italy. I mean, if you look at the number of 15-year-olds and 10-year-olds and 5-year-olds, the numbers are tiny. So Germany's going to have to be in a position, as Merkel already did, taking in people from abroad. But Germany is going to be faced with, they do not have enough people. And obviously the pandemic, one of the things around the world we're seeing is that the fertility rate fell. People didn't use the pandemic as an opportunity to have lots more children, as they did whatever it was in New York when the lights went out. So fertility rates around the world have fallen. So a German chancellor is going to have to deal with a very aging, declining population. There you go, pictures of my fish. I'm a fishing guy.
Man, that is a huge. What is that, Danny?
Well, that's a jack. If you keep going down, I'm a snook guy.
Look at that
snook.
Yeah, okay, and
there you go.
And Danny throws these back.
35-inch snook. They call it the tug is the drug. There you go. Look at that lot. There you go. Redfish.
Well, all right, there's happiness. So
Absolutely.
And you're talking about happiness in this article, and our last interview was about the misery index. I know it's a long-term study. And are you seeing any drop in the misery index because of vaccinations and people?
So one of the things that I have various people working on. I mean, the first thing to say in the United States is we have a major issue for the less educated prime age, particularly whites, but also for Native Americans and others, which is that they have extreme levels of distress. And Angus Deaton and Case have written a lot about what we call deaths of despair, which is that peaks amongst the prime age. But the latest data actually is a big worry. The worry is, so the US Census Bureau produces a whole set of things called the Household Pulse Surveys. Now, every week or so, I think people should be interested to go look at it. So it's Household Pulse Surveys, and we can get the data. Well, what it turns out there, Dale, is that now who's been most impacted by, there's crossing fingers and hoping here, guys, that's my view.
Yeah.
So what's happened is that this has really impacted the young. So in terms of, think of the students coming out of high school, students coming out of Dartmouth and other places. What have they been able to do? Have they been able to get jobs? And the story that we're seeing is anxiety levels, depression levels, impact of this virus, of this lockdown. Not surprisingly, it has impacted the young. We thought that problem really had kind of gone away. Youth unemployment was the huge issue in 1980 and 1990, and all of us worked on that. And we thought it was about the prime age. So that's a really big deal. What are we going to do about the fact that the young are impacted? And the one thing we know is a spell of unemployment when you're young has really bad effects later. So I think that's an emerging problem. And think of it, their spending when they're not able to get jobs, such jobs as they get are not that well paid. So this demographic group, I would say, of 18 to 22-year-olds are really a big worry, and that's what the latest data suggests. But the evidence in the United States is that we have a huge mental health problem. We have a huge problem of opioid deaths. We have a big problem with suicide. And in fact, what's happened is that the pandemic has reduced life expectancy, but that was falling even before the pandemic came. So I would say that's a crucial issue, which is going to impact the economics, impact people's sense of well-being, and that's a concern.
All right. Well, this study that you have is close to my heart. I'm hoping that these kids, when I came out of college, we were in the recession in '76, and I didn't get the greatest job. I was paid $75 a week to run orders into the pit on the CME floor. But I'm hoping it's situational for these kids, and that it's not, clinical.
Well, it might well be. It might well be. I mean, the evidence we have,
because that's a lifelong battle.
It's a lifelong battle. Completely right. I mean, the evidence we have is two things for the young. If it's a really big cohort when you graduate, that's a problem. That's not true now. But the really big deal is what's the state of the economy when you graduate from school or college, and that turns out to have not just have a short run effect, but it has a long run effect, which may, as you say, be clinical. So this is something we need to. You need to think about, and in a sense, it
becomes your paradigm.
Yeah, it does.
Right? Everything's a struggle. Everything's hard.
Yes.
So that's what you expect.
Well, Dale, remember that I've argued a great deal in the book. In my book, I talk about the fact that so the Fed says from 2015 to 2018, the U.S. economy is at full employment, and everybody's feeling great. Well, Danny Blanchflower looks at the data and goes, "No, that's not how it works. It can't be true that we're sitting at full employment if there's all this hurt and pain and unhappiness going on, and in effect the rise of populism around the world didn't happen because everybody was feeling great." And I take the sense that if you were at full employment, that would mean that the balance of powers to workers had risen. So in a sense, the whole Fed era from 2015 to 18 was not listening to the conversation between Dale Pinkert and Danny Blanchflower, which basically had it right and had it right.
Yeah, and you know what, Danny, I enjoy talking to you. I mean, it's fun. Okay, besides trying to inform people with compelling stuff, it's fun, and I hope some of the good-natured discussion that we had today lifted some spirits, and we all need hope. Okay, because hope is the oxygen in our life.
Well, absolutely. And I think if you're a central banker, I mean, if you listen to Janet, as I said, I've known since 1993. I mean, she has a good heart, and she's a labor economist, and she understands, and so does CC. She understands what you just said. It's about giving people hope, and it's allowing them to suggest to them that this transition, there's people at their back helping the transition. But I think the central message is from a labor economist like me, there's much more hurt out there than you would think, and this is going to impact spending behavior. It's going to impact all sorts of things like the unemployment rate and other stuff. But we should be mindful that we've never seen anything quite as unpleasant as this. It was bad to start with, and then we got hit by another shock, and we're going to have to adjust from both things.
Well, I'm hopeful that you and I are going to have another talk maybe next month about what's going on and unfolding in the markets and
Absolutely.
with central bankers. And thank you so much, Danny, for your time.
Let's do it. Yes, sir.
Okay, buddy. All right.
Thank you,
and good fishing to you. I usually say good hunting.
It's blowing too hard to go at the moment. 30-mile-an-hour winds and
you know that hope I talk about, Danny. It's in your life. Don't use hope in your trading and investment plan. That's carbon monoxide for investing, but use hope in your life. And Danny Blanchflower, thank you so much for hanging out with us today in F.A.C.E.
Yes, sir.
Have a great weekend.
See you soon.
All right. Everyone else, have a great weekend. Thank you very much. Hope you have a great weekend. Planning for next week. Use the weekend when the markets are closed and you could think clearly to plan your moves for next week. And you could join the team in 18 minutes for the morning edge to wrap up your week. And remember, it's great to have hope. And one way you can remain hopeful is to be grateful for something and not just pips. So don't just count your pips, count your blessings. Adios, everybody. Have a great weekend, and we'll see you next week.